All right, good morning, everyone, and happy Friday. Welcome to the next version of our Raising Your Real Estate IQ talks, and I'm really excited to have John from C2 Financial here. He's going to talk with us about reverse mortgages. I know it sounds like a bad word, and I figure whenever we think something's just terrible, maybe we should just learn a little bit more about it, get a better idea so that we can, I don't know, either help family members, ourselves, friends, whatever it is. It's just getting a little bit more info on something that could be, I don't know, worthwhile. So, John, thanks so much for being on today. Really excited to have you and learning a little bit more about a mortgage that not a lot of people know about. So let's jump in. So the first question we're going to talk about is, what is a reverse mortgage?
Well, first of all, Kara, thanks a lot for having me on. Reverse mortgages are very misunderstood. And a lot of people will think that a reverse mortgage means that you lose the title to your house. That is not true. Kara, you may remember years ago where they had the reverse or the negative amortization loan. Well, that's really what a reverse mortgage is. Essentially, is what happens is you take a mortgage and you don't have to make any monthly payments. Now, however, the interest rate or the interest still then continues to accrue on the mortgage. So for sake of an example, if you had a $100,000 reverse mortgage, and although the rates are lower than this today, I'll use 5% because it makes the math easy. After 1 year, while you haven't made any payments, you would owe $105,000 at the end of the time. So, it is, like I said, it's the ultimate negative amortization loan. It is used in a lot of places for financial planning, people who are house rich, and used for cash flow purposes. So they're typically insured by FHA, so it's an insured mortgage. But that's the simplest really of what it is. So a forward mortgage, we pay off the mortgage. A reverse mortgage, the mortgage gets bigger.
Got it. So somebody who has a reverse mortgage would not necessarily be paying down their mortgage, but they'd be actually getting paid. And as a result of taking out the equity of their house and not paying down the interest, the amount on the balance is going to grow over time. Is that right?
Correct. Okay. And that's why we say forward or reverse mortgage.
I know it's so interesting to hear the term forward mortgage, because everyone's just like, it's a mortgage. That's all we have out here. But of course, there's so many unique, creative lending solutions to kind of accommodate everyone's needs. So let's talk now a little bit, now that we know what a reverse mortgage is and how it differs from what we call forward mortgage. Let's chat a little bit now, if you could share with us, about what are some of the requirements to take advantage of a reverse mortgage?
Well, the number one requirement is you must be at least 62 years of age. And only one, if it's a husband and wife, only one of the borrowers needs to be 62.
Okay. In
addition, it has to be, you have to own the home. It can be in a living trust, just so you know, if you have a living trust on your mortgage. You have to, credit used to be no issue, but credit is some issue now. And you also have to have some ability to pay your taxes, your property taxes, and maintenance. So, previously people had no money, 500 credit score, and they take a reverse mortgage, and then they couldn't pay the property tax, and the property could be foreclosed because of property taxes. But really, the only major requirement of a reverse mortgage is that you're 62.
Okay. Is there any kind of loan to value requirements either because I know in some cases, you have to have 5% equity or 3% equity for some conventional mortgages, things along those lines. Is there something similar with a reverse mortgage?
Typically there is. And again, I'm going to use a number that is easy for math. Let's assume you have a $500,000 mortgage or $500,000 value of your home, and
Okay.
you have zero mortgage on it. As a rule of thumb, although it varies based upon how old you are, you can borrow about 60% of the value of the home, of the initial value of the home.
Okay.
So we might get into this a little bit more later on of the different ways to use it. But in this instance, you could literally take $300,000 out, put it in the bank, and never have to make a mortgage payment on it.
Mm-hmm.
So, but that varies. As you get older, you can borrow a higher percentage, and as you're younger, you can obviously borrow a lower percentage.
Okay.
One other thing is you can't have any other mortgages on it. So there's no seconds, and if you have a forward mortgage, it needs to be paid off.
Okay. Got it. So somebody could either purchase a home with the reverse mortgage, or they could maybe refinance if they're in their current home and they're like, wow, things have changed for me. I want to take advantage of these low rates, and maybe this reverse mortgage is an idea that I should explore. I'm over 62 or 62 or over, and I want to take a look at this. So they just have to make sure that they've got an equity position at their home that would be supportive of what they need. Okay, because it's not like, oh, I'm going to put 5% down and get paid for the rest of my life from my mortgage. That's not going to be allowed, right?
Correct.
Okay.
Correct. And so let me jump into a little bit of different mortgages of how you might use them. Okay, because you brought up a good point. You can refinance a current mortgage, and this is probably the one I see the most.
Mm-hmm.
People will have a $200,000 or $300,000 mortgage on a $500,000 house, and for whatever reason, they're living on Social Security or a pension. Well, that mortgage payment becomes a big part of their monthly budget.
Mm-hmm.
So what they would do is take a reverse mortgage, pay off the forward mortgage, so that maybe $1,500 a month house payment they had suddenly goes away. Number two, some people will take it as a lump sum because they might have something large expense that they need to take care of. An example would be home improvement. We see a lot of senior citizens who they've been in their home for a long time, but as they're retired, they've built up a lot of what we call deferred maintenance on their house. And so you could take a lump sum and at that point in time, maybe it's $100,000 to fix up the house. The third way of doing it, well, there's four ways really. The third way is you could start taking a monthly income. Now that's assume you don't have a forward mortgage that you're paying off, or it's a small forward mortgage. Because essentially is what the reverse mortgage does is gives you a credit line that you can draw off. Okay? Now, so a lot of people will say they're not getting enough monthly income, but they got $500,000 asset that they've saved up through their life, and all it's doing is giving the ability to live in the house. Well, you could start taking a draw as similar to an annuity off of that reverse mortgage every single month as a monthly income payment. Now, one thing, incidentally, that monthly income payment is not taxable. And it confuses a lot of people, but if you think about it from an IRS point of view, is what you're doing is you're taking out principal. It's not actually income, you're taking out principal, so it's not a taxable event. And the final thing people use reverse mortgage for is to purchase homes. So, and it can be used two different ways. You want to purchase a home, you want to go from 2 stories to 1 story. Same reason you may take a reverse mortgage on the home you own, you would do it on a house you purchase, because you could move down to a 1 story, take some of that equity of the previous house you had, put it in the bank, so you have it for emergencies, and you get into the new home without having a monthly payment. One other interesting thing you might do is you might be able to buy a little better house than you normally would. So for instance, if you had $500,000 cash and you moved from, I don't know, Nebraska to California, and the house prices were a little more expensive in California. Well, rather than paying $500,000 down, you could put $500,000 down, and you could pay $500,000 a month. And that $500,000 cash, and you moved from, I don't know, Nebraska to California, and the house prices were a little more expensive in California. Well, rather than and pay $300,000 cash for a house, which would be tough here, you can buy that $500,000 house, put the $300,000 in, take a $200,000 reverse mortgage in which you're not making payments, and so you can buy a little better house than you might otherwise be able to.
Interesting.
So there's a lot of different strategies you can use to do that.
And there's something else that you said earlier that kind of got me thinking. I've heard somebody mention this recently when I was talking with, let's see, 2 weeks ago, I was talking with Jonathan with ADU Pros, and he was saying that he's actually come across quite a number of people who are retiring or, you know, getting older, and they're actually building ADUs on their properties and getting either family members to come live in the main house or renting out their main house. And I'm curious to know if a reverse mortgage could be a strategy in order to get funds necessary to build that ADU and for them to go move in. Is that something that could be allowed?
I'll say yes and no. Yes, you can use it to build an ADU, but you and I'm not 100% sure on this. If you can live it and rent the front, one
because
other
it has to be a primary residence. Is that right?
You have to be living in it, right? And so I'm not sure with the ADUs if the lenders still consider you living in the ADU the primary residence. Now, the flip side is this: you may live in your primary residence, build an ADU, earn $1,000 a month off of that ADU, and suddenly, not only is your home, you're not making a mortgage payment, but that mortgage payment or that reverse mortgage actually gave you cash flow, positive cash flow from the person living in the ADU. So it's absolutely available to do.
Got it. That's interesting. I mean, I know there's some cautions when it comes to ADUs, so maybe we could play devil's advocate for a second. Or sorry, not ADUs. Cautions when it comes to reverse mortgages. Let's play devil's advocate for a second. What would be the main reason why somebody wouldn't want a family member to get a reverse mortgage?
You know, it's kind of a touchy subject for different reasons. But number one, the interest rates tend to be higher than a regular mortgage. Number two, I believe there are some unscrupulous people out there. One of the things you can't do, and it's illegal to do, is people will take a reverse mortgage and then buy an annuity with that reverse mortgage proceeds to get the monthly income. It's unethical to do that. So don't ever do that. Sometimes now when we ever do a reverse mortgage, we will almost always include the children in the decision-making process. Now, I have an opinion that you've worked hard your whole life to save up all your money for your retirement, and that's what it's for. On occasion, children think that you've worked hard your whole life to save up for their inheritance. And if the parents are starting to spend the money out of the home as equity, the inheritance gets a little lower. I kind of have strong feelings on that. But let me address that as a separate part. The children are involved, they're all fine, and they say, yeah, mom and dad, get the reverse mortgage. Now, one of the ideas of a reverse mortgage is you want to kind of maintain your equity if at all possible. Well, if you take a $300,000 mortgage and that mortgage is growing by 5% each year, the flip side to it is the value of your home is increasing every year as well. So it's what you're hoping is that while the mortgage balance is going up, so is the value of your home, and you maintain your equity.
I see.
So that's kind of the big thing. Now, the children, both parents, they did the reverse mortgage. It worked great. Both parents have gone. What can the kids do? Well, the kids have three choices at that point in time. They can pay off the reverse mortgage and keep it, just like if they had a forward mortgage. They can sell the home, split up the money amongst the kids. Now, it's an interesting thing I have found through the years is all parents say, hey, let's keep the house in the family. And if there's more than one child, typically those children have differing needs, and they tend to sell the house. The third is the children can take a mortgage and keep the house. So those are the exact same options that they have if the parents have a forward mortgage on their house. Okay. One other thing that is an advantage to a lot of people, let's say the worst happens and the value of the home is actually lower than the mortgage and the parents have passed. It's called a non-recourse loan. So at that point in time, the lender cannot come back and attach other assets to pay for the mortgage. So theoretically, you could have a negative balance of $200,000. No problem. That's what a reverse mortgage does. And it's the reason why you pay insurance to have the mortgage. That's where it comes from.
So you're saying on that term, just to make sure that I'm understanding it right, you're saying that, let's just say worst case scenario happens, the market tanks, your parents have been taking money out of this place forever. Now it's worth way less than the mortgages. And at this point, the lender can't come back and say, hey kids, give us dad's, luxury car that he had before he passed. Give us all these other things to make up the difference. It's just kind of like, darn it, this is our loss. Too bad for us as the bank, and we'll just take the home and try to make what we can out of it. Is that the idea that you're saying?
Correct.
Okay.
That's exactly what it is. Yeah.
Okay.
So it's
could be a little bit of protection in an extreme situation.
And it works very well.
Okay.
Yeah.
Well, this has been really, really helpful.
So
definitely.
So let me give you a couple examples of people who have at least two different things of people that have got reverse mortgages. I have one client who I happen to know very, very well, who was a teacher his whole life. Now, his house was in Orange County. And so in 1970, he bought his house in Orange County. And by the time he retired, obviously the value of that house was significantly higher. Well, his teacher's pension paid him a certain amount of money, and it was fine for a period of time. But eventually, he actually moved down here to be closer to his children, and he took a mortgage on the house down here. Well, at one point in time, and his line to me was this, I can't go to Verona every other week because it's costing too much of my other expenses. He would go to Verona, sit at the horse racing track, and maybe spend $20, every other week. Well, that became money that he couldn't really afford to spend. And so instead, we took his forward mortgage, flipped it, made it a reverse mortgage, no longer had that $1,500 payment, and he could start going to Verona again. Another example where you might use a reverse mortgage is you need to start getting help at home. So this is a big question for children. I'm actually going through it right now with my mother, is do you go to a residential care facility? Do you go to a skilled nursing facility? Or do you bring someone in? Well, all of those things are expensive. And most parents, I would say, most people actually want to stay in their house, but there's a point in time they can't without having help. So you might take a reverse mortgage to pay to bring someone in so you could stay in your home longer term. So that's another great example. The third one is with your credit line, you could go and pay off all your cars, credit you might have. We hear parents doing it. Well, guess what I had to do with my 60-year-old son? He needed a little bit of money. So where did I get the money from? They take it from their credit line. So we had it's kind of a funny story. I had done a seminar years ago, and the speaker was talking about, your kids are being a problem. And he gave the rhetorical question and said, how long have your kids been a problem? And that's when one guy stood up and said, well, my son is 60. So we're at 60 years so far. So it gives us flexibility. It gives you flexibility at any particular point in time, which is what you need in retirement.
Yeah, it's great to know that there are some options, and maybe there's, a reverse mortgage might not be best for everyone, but at least have it be on the consideration of options that you're looking at, because like you said, the flexibility could be great and it might give you the funds that you need to make decisions for the future. So nice. So, great. Well, thank you again so much, John, for sharing this information.
Yeah, let me give you one last line.
Okay.
One last thing. One thing we have learned about retirement is it's not necessarily your assets, it's your cash flow.
Mm-hmm.
And if your cash flow is good, your retirement tends to be better. And that's what a reverse mortgage helps with. That's
great. Thank you. Okay, well, everyone listening, if you guys have any questions, post them in the comments. We'll get connected. We'll get you connected to John and get your questions answered. But hopefully this was a little eye-opening as to the options that exist, maybe for you in the future or for other family members or friends. So, of course, as you guys know, I'm a realtor here in San Diego County, and if there's ever anything that I could do to help, I would love to be a resource. And John, thanks again. Have a great Friday, and hope everyone enjoys the nice sunny day outside. Okay.
All right, Kara. Have a great week.
Thank you. Bye.
Weekend.
I am so glad that you watched all the way to this point in the video, because I'm happy to help raise your real estate IQ. I hope that you've enjoyed this video, and I wanted to take a moment to invite you to check out the description below for helpful resources and to download a guide that can include things like tips and checklists to make planning for your move even easier. It's honestly never too early to get started. If you like this video, please be sure to hit subscribe and turn on the bell so that you can get notified when we share new real estate videos each Thursday. You'll also want to check out the thumbnails that are about to pop up on the screen for other videos that we've custom made for you on this channel. And as always, this info is for people everywhere, but if you're looking to make a move to the San Diego area, I'd be happy to be a resource. You'll find my contact info in the description below. So have a great day, and I hope that you love where you live. See you guys in the next video.